we expect that John will be with us shortly. And Sarah, do you have a reading for us?
I don't. We are now, thanks to the amendment that the board made last month to the bylaws, section 3.7, the board is authorized to meet via video conference from one which the public may attend and at which members are present. So we are in full compliance with the open meetings law and the DASNY bylaws. So we are joined from all three offices, the Albany office where Joan Sullivan is, our auditors are joining remotely. We have Al Carney and Beryl Snyder of the audit committee in the New York City office. John Gardner will be in the Buffalo office. And if you'd like me to read the roll of other folks in the rooms, I'm happy to do so. Otherwise, I can turn it back over to you to start the business of the meeting.
Well, in the interest of time, why don't we start the business of the meeting? The first agenda item is the approval of the June 21st minutes. Can I have a motion?
So moved.
Second?
I'll second.
All in favor?
Aye.
And
Aye.
I think our committee chair has just arrived.
Vanessa gave you all the stuff, but I'll just be in the corner office. If you need anything, just let me know.
Okay, can they see me now?
They can see you, yes. Hi.
Where's the,
John,
So
it's
you
Joan
are
Sullivan.
top left.
We just approved the minutes of the June 21st meeting. With us in the
Oh, good.
committee is myself, you, Al, and Beryl. So you're on the second
Excellent.
agenda item. I'm turning it back over to you.
I like that.
well, okay.
Thanks, John. Good to see you.
Paul, good to see you. I will just comment that when they notified me that they were moving outside of Buffalo and off the beaten track, they were not kidding.
I understand the facility, John, is very nice, though.
Pardon me?
I understand that it's a nice, I don't know about the location, but I understand that the office space is very nice.
Oh, yeah, it's all new and it's kind of rural. Okay.
Yeah, we're at the point where the KPMG people did their presentation, John, as soon as you introduced them.
All right, well, allow me to introduce Jeff Koch and Ryan Kenyon from KPMG. And I will turn it over to you guys to talk about the audit plan.
Great. Thanks, John, and good afternoon, everybody. We're happy to be here to be presenting the audit plan for the March 31, 2023 financial statement audit. I'm joined, as John said, by Ryan Kenyon, who will be our manager again this year. And we'll be get started here with the agenda. Ryan, do you want to take it to the next slide? So just on this slide, this is our overall executive summary, just some of the highlighting areas that we'll talk about. We'll talk a little bit about our audit experience with modernization of it, some of our typical required communications, as well as scope of the audit, as well as the key lists that we'll be talking about as we go through the audit plan. Right. So this slide here, just a little bit of an update to our audit plan and a couple of the key changes. And obviously one of the biggest ones that will happen this year is that there are several new GASB pronouncements that DASNY will be adopting. DASNY will be adopting GASB 91 related to the conduit debt obligations, which will result in a significant portion of the debt that has historically showed up on DASNY's balance sheet to be removed from the financial statements and more so disclosed as a financial disclosure in the back of the statements. Additionally, DASNY will be adopting GASB 87 related to leases and 96 related to SBITA. Those will have some slight impacts to the presentation of the financials and having items come out of the financials related to those liabilities that DASNY has associated to leases that are typically considered operating leases and all. As we go through the plan, we've adopted our plan to incorporate these changes for the 2023 fiscal year audit, and we'll make sure we consider that as we go through the process. The other change is more on our end, and it has to do with a change in another auditing standard. This year, it's the SAS 145 related to understanding the entity and its environment and assessing risk of material misstatements. And this really has a lot more to do with enhancing how auditors approach an audit and looking at the risk assessment procedures and really kind of making more broad those risk assessment procedures that we would perform, and just enhancing that documentation. And where this may impact DASNY management a little bit is we may have some additional information requests as we kind of, perform those increased, beefed up, if you will, risk assessment procedures. The good news for DASNY is over the last few years, KPMG has been implementing a new audit tool. It's called our KPMG Clara workflow. We implemented that in the prior year. And the goal with that tool was to effectively reach this risk-based approach and kind of be compliant with this new SaaS standard as well as the PCAOB standards. So there won't be a ton of change associated with the audit as a result of that, other than the increased risk assessment procedures. So Ryan, can you go to the next slide? This slide here is presenting the overall KPMG engagement team, and we're happy to report that significantly the engagement team will be the same engagement team you'll be used to. I'll be leading the engagement as the managing director. Ryan will be returning as our lead engagement manager, and Ami Patel will be the senior associate leading the team in the field of the day-to-day operations. We've also have Jane Letch returning as our concurring partner review, as well as some of our typical subject matter specialists that we've used in the past. You'll notice down at the bottom, we do also talk about the meeting of the state's MWBE requirements, and our goal is to utilize the same two firms that we have in the past, being Long Island Financial Management Services, as well as Vendiola. Ryan, if you can move to the next slide. So this is a slide just kind of documenting what we've done over the last year related to the DASNY engagement and some of the items we've done to kind of enhance the overall experience. In the past year, we've rolled out and enhanced the use of our KPMG Clara for Client Collaboration tool. That's the tool that we've implemented that allows communication between us and management, specifically provided by client items and those such. We've also enhanced our use of data and analytics, presenting more Power BI dashboards, which present some visualization of some of our preliminary risk assessments, as well as developing more automated routines that assist in auditing of the investments, leases, and loans receivable and journal entries. We continue to coordinate the audit with management and continue to improve the PBC list year on year with management and trying to enhance that to get better information as we go through the process. So moving on to the next slide, this is just kind of, planning a better experience overall and kind of taking a deep dive look at kind of the overall picture of what things look today, not something that we necessarily cover fully today. In the business landscape, obviously the things out there is cybersecurity. This is definitely something that continues to be around just with the digitalization coming up of a lot of audit elements. We also have ESG initiatives out there as well as the diversity initiatives. In the middle is the DASNY landscape, and we know DASNY does change periodically. We know in here there's some IT transformation DASNY will be going through. The financial reporting process will change slightly as we talked about with the new GASB pronouncements. And DASNY also will have the new subsidiary that will be there. In the middle there, where it's the audit process, that's where we're talking about how we're going to perform our audit. We have down in the right-hand corner there, the new auditing standards that will be part of our audit, as well as the fact that a lot of the procedures we perform are trying to modernize our audit with a lot of technology and audit procedures here. Ryan, if you can go on to the next slide. This slide is geared back towards that previous discussion I had about the new SaaS requirement. I won't dive too deep into this slide. This is just kind of a little more of that impacts as it relates to SAS 145 that I covered earlier, more for informational reading. Okay, Ryan. And with that, I'll turn it over to Ryan, who will take us through the required communications.
Thanks, Jeff. So as you probably know, Jeff Coach will be returning as the lead engagement partner. And so related to the scope of the audit, we have the basic financial statements will be performed in accordance with the generally accepted auditing standards and includes consideration of internal controls over financial reporting, also known as IFICR, as a basis for designing audit procedures, but not for the purpose of expressing an opinion on the effectiveness of DASNY's IFICR. We're also performing an examination of the compliance of DASNY with the requirements of Part 201.3 of Title II of the Official Compilation Codes, Rules, and Regulations for New York State in accordance with AICPA standards. And similar to last year, the deliverables will be the auditor's report of the basic financial statements with an anticipated date around June 21st, 2023, along with the report of internal control over financial reporting, the auditor's report on supplementary information, along with the letter to the audit committee and the management letter, as well as the auditor's report on the 12 individual financial statements for the bond resolutions on or about September 30th, 2023. So this next slide right here just kind of shows where we're going for the next few slides. So I'll just continue on. So for materiality in the context of the audit, judgments about materiality typically involve both qualitative and quantitative considerations. So in regards to just for the thresholds for, how large the different accounts are and the materiality for there, we also consider the ownership structure, debt arrangements, and kind of the overall business environment, which kind of all go into consideration of materiality and the determination of materiality in the context of the audit. So moving on to the next one. So our timeline, this probably looks familiar. We kind of have it broken out in 4 different phases. The first phase being the initial planning and risk assessment, which is kind of where we're starting right now from November 1st till the end of December. So here we this is our initial coordination and the involvement of others. And probably the biggest step here is the identification assessment of the risk of misstatements in our planned audit procedures for each of the business areas. And here we'll also kind of work on obtaining and updating our understanding of DASNY and any kind of changes within DASNY's operations or the industry as a whole, as well as performing inquiries of the audit committee and management, as well as beginning to coordinate with internal audit, which we'll get into a little bit more in a couple more slides. So moving on to phase 2, which is beginning of January to the end of March, which is our interim phase. Here we kind of start designing, evaluating the design and implementation of entity level controls, as well as process level controls, and performing our walkthroughs. And then moving on to kind of phase 3, which is April through June. So this is probably the biggest portion, which is our substantive procedures, which is a bulk of our PBC requests and stuff that you've become familiar with. And then finally, the phase 4 is July through September, and the overall test work over DASNY's individual financial statements. And then kind of right towards the bottom here, we have this just reminder of the ongoing communication. We kind of break these out in these 4 phases, but we have ongoing communication with management. We have regular touch points with at least weekly meetings. We kind of continue to, stay in touch and have a frequent touch points. So to keep that ongoing communication going. Moving on, so key areas of audit focus. These will be similar to prior year practice. So I'll kind of just hit on these. So for cash investments, we'll be confirming cash investment balances at year end, as well as performing independent price testing on marketable investment securities held at year end, as well as a review of GASB 72. And as mentioned, evaluate the procedures over investments for compliance. For leases and loans receivable, perform test of detail, as well as an overall review of the collectability of leases and loans receivable at year end. For bonds and notes outstanding and interest on bonds and notes, send third-party confirmations at year end, as well as perform substantive procedures over interest on bonds, financing income, and defease bonds, and an overall review of GASB 86 and 91. Last one on the tab, the accounts payable and accrued expenses. We'll be performing a search for unrecorded liabilities as of year end and through the end of our field work, as well as a review of the adoption of GASB number 87, which Jeff will get into a little bit more detail later in the presentation. Last tab for the key areas for the audit focus for OPEB liabilities and GASB 75 will be obtaining actuary confirmation related to OPEB obligation and involve KPMG actuarial specialists to assist the audit team in evaluating the assumptions utilized by DASNY in the OPEB obligation calculation, as well as a review of the overall accounting of GASB number 75. For financial statement preparation disclosures, we'll be obtaining third-party attorney confirmations. And finally, for information technology involvement, we'll be performing inquiries around management, cybersecurity risk assessments, and considerations around those potential impacts on the financial statement level, which again, we'll touch a little bit more on slide 17. So our overall approach to fraud, as always, we have the kind of presumed risk of management override, which is addressed through our fraud procedures, including our journal entry test work and other test work around the overall financial reporting process. And we always perform inquiries and interviews with DASNY at both the management and the board level. Moving on to the involvement of others, similar to last year, we plan to utilize about 160 hours of assistance from DASNY's internal audit department. And similarly, the areas that we anticipate to use assistance from the internal audit would be the purchase and sales of investments, monthly reconciliations, cash receipts and disbursements, and overall performance of test work over completeness of liabilities at year end. Technology assurance, or formerly known as technology assurance professionals will be utilized as part of our understanding and testing of our considerations for cybersecurity as it pertains to the basic financial statements. And finally, for actuarial, we will be involved in the review of the post-employment and other employment benefit obligations to ensure conformity with GASB 75. So last tab before I pass it back to Jeff for cybersecurity considerations. As we know, the shift from to the more remote work environment always presents new challenges. Even as we kind of get used to this hybrid kind of work environment, there's always a surge in different sort of cyber considerations that we have to think about. So we meet regularly with our TA team to kind of think about these new challenges and ways that we can change our risk assessments and audit procedures to kind of tackle them head on and see how we can, make them as efficient and as effective as possible. With that, I'll pass it back to Jeff, Coach.
Thanks, Ryan. So the next section within our presentation is just some of the new and emerging accounting pronouncements. As I mentioned before, 2023 is a big year. There are several pronouncements that will be applicable. The big ones that will have the impacts most on DASNY will be the 87 related to leases, the 91 with the conduit debt, and then listed here under 24 is GASB 96 related to the SBITA or subscription-based information technology arrangements. That isn't necessarily applicable until the next fiscal year, but given that the state of New York's adopted that and how closely that is related to GASB 87, DASNY will early adopt that for the coming year. Go on to the next slide here. This is just kind of an overall summary of GASB 87, talking about the primarily objectives of improving the overall reporting and financial information. As we go through this process, we will work with management and review their assessment of how they develop the population of the current arrangements that will be presented within the financial statements, as well as look at some of the calculations they utilize to derive the amount that were reported in the financial statements. Moving on to the next slide. This is again another summary for GASB 91. This obviously, as we mentioned before, will be the bigger changing pronouncement for the current year. This is where we'll kind of look at how DASNY developed the financial statements and remove the conduit debt type activity based upon the definition of conduit debt per the pronouncement, and evaluate and test the subsequent disclosures and remaining information to ensure it's completely and accurately recorded within DASNY's financial statements. Lastly, the next slide here is GASB 96, which talks about the SBITA, and that is, the information technology type subscription-based assets, more so known as some of the intangible assets that would exist, and how those were accounted for. We would basically be testing these in conjunction with how we would test leases, looking at the population management identified, and evaluating the overall amounts. The next slide here is just kind of our transparency report slide. We do present this annually. We do want to let the committee know here that the 2021 report is available. The 2022 report will typically be out in the early part of 23, but it is the updated information. If the board was interested, there's a link down below. The other item of note on here is that we did put out our 2022 impact plan, which talks through our audit quality, the status of our Accelerate 2025 that we've talked about before related to our diversity and inclusion measures, as well as some of the ESG views that we have related to KPMG and all. All right, go to the next slide. This is our shared responsibility independence slide. Again, this slide's consistent with the prior years. We wanted to just make note that as of today, we do believe we're independent of DASNY as we prepare to perform the audit for the current year. And Ryan, go on the next slide. This is the overall responsibilities as part of our required communications between management and KPMG. KPMG is responsible for performing the audit and issuing the overall audit opinion. Management is responsible for the financial statements, and just wanted to make sure that it's noted that the audit of the financial statements does not relieve management or the audit committee of their responsibilities. And lastly, Ryan, if we go to the next slide, this is our typical inquiry slide. Listed here are some of the typical inquiries we would ask of management as we go through the audit as well as the committee. If we ask the committee to review this listing, if there's anything that we should talk about, we can actually schedule a call later on to discuss. But we just want to share this information about what types of things we do inquire as we perform our inquiries. With that, that's the information we had prepared for today. We do open it up if the committee has any questions for us.
Jeff,
Have you-
I'm sorry, that sounded like
Go ahead,
John.
Al.
If John has questions, he should probably precede me.
No, Al, go ahead. You're first.
Okay, John. 3 inquiries, and one of them is sort of an environment. The cybersecurity environment, Jeff, I know at one point you all either secured the services of an outside organization or beefed up your own organization internally. How does KPMG assess now the current cybersecurity environment? Is it better than last year, worse than last year, the same, or are you, and you may not be prepared to answer that. If you are, I'd love to hear the answer.
Yeah, so we haven't had the inquiries yet to kind of get the status on how DASNY has progressed related to it. I can say overall, cybersecurity is something that is always changing and getting more sophisticated, especially in this digital age that we're in. So again, I think every year the status always changes, and we'll continue to have those inquiries with the IT team. We do involve our technology assurance folks to meet with DASNY's IT team to go over kind of the progression they've made and where they're at with their overall status plan. So as we know
Jeff,
more.
I'm asking a bit of a different question.
Oh, sure.
I'm talking about the overall cybersecurity.
Gotcha.
DASNY
In general.
obviously is going to do everything it can to
Yep.
protect its information. That's fine, and to keep the bad guys out. But my question really is, what is the overall environment like? Has it improved? Is it, or is it, I would assume that it may be worse, but I don't know that. Thought I'd ask.
Yeah, I mean, it's always, again, it's always changing. There's always new threats out there, and it's something that everyone always has to stay at the forefront. I think that there are more information out there related to it to help folks stay at the forefront of it, but I'll say it's not always improving. It's something that we'll probably always be combating and making sure we stay at the forefront of and continue to work through.
My second question has to do with the new subsidiary. I understand that it will not be audited separately, but that it will be, I think the expression I heard used was rolled up into the DASNY audit. It's interesting. But my question is, because of what we're doing and because of what's involved, will you all be putting together different subsidiary standards of audit?
So when we do perform the audits and we look at this, we have guidance that kind of looks at this more of auditing DASNY as the whole, and then also making sure that we look at the component. So we will evaluate the component and determine what level of effort we should be performing over the component to ensure we do address the component sufficiently to issue our audit opinion, given that that audit opinion addresses both DASNY as a whole, which would include the subsidiaries as well too.
My third and final question has to do with your work in the fraud area. I worry about fraud. I don't know how deep a dive KPMG does when it is evaluating the possibility of fraud. I'd like to think everybody at DASNY is completely honest and that fraud is impossible in our environment. But being realistic, I know that it can happen. I just don't know how you inquire about fraud. How do you do that?
So from our audit approach, a lot of times we make sure we have inquiries with management to understand the systems of controls in place and how those controls are in place to help prevent the fraud from actually occurring. So before you can, record specific journal entries in the system, what types of approvals you need, things of that nature. We also do a very deep dive of the entire journal population that makes up the DASNY financial statements and look for specific transactions that we would consider more fraudulent or potential leading to more fraudulent, what areas could be more fraudulent, and make sure we put a higher degree of scrutiny over those transactions to make sure we have a thorough understanding.
Okay. I didn't have any more questions, John.
Jeff, what will the presentation for the subsidiary look like? Will it be baked into the overall DASNY financials, or will it be separated as a schedule? How do you anticipate this working?
So the prescribed GASB stipulates that this would represent what's considered a blended component unit, and that in your financial statements, your balance sheet, and your statement of activities, the subsidiary will be combined together with the DASNY activity. There are other, disclosures that could be made depending on the materiality of it, if DASNY elects to do that, where you would present more of a condensed balance sheet and statement of operations presenting the activity of DASNY as well as the activity of the subsidiaries. But that would be Kim and her team's determination that we would audit the presentation in accordance with the pronouncements.
I guess part of what I'm getting at is that even when we take out the conduit debt, we've got billions of dollars of state debt, in our financial statements. So to get a picture of what the subsidiary is doing, if it's all, combined together, the subsidiary will get washed in the ocean of state debt money, and nothing will look material, because nothing does look material when you've got, this much debt in your financial statements. So, I guess what I'm getting at is that, if we don't, this is not like our other subsidiaries that we organize as some sort of a liability container. This thing is gonna actually have, operations. It may not have any actual cash or much cash flowing through it. It may have a lot. I have no idea what it's gonna look like. But if it's not broken out, we really won't be able to track it. We won't be able to see it.
So John, are you asking whether or not in this first year, we should pay more attention to the numbers that internal and external audit will produce, such that we can get a sense of how compatible what the new subsidiary is doing is with what DASNY was doing previously with regard to the audit of financials? Is that what you're suggesting?
Well, what I'm really suggesting is that the presentation, in order to get a snapshot, in order to get, a look at the subsidiary, if it's not separated out as a schedule or, in some fashion, if all of the TUB numbers are baked into DASNY's numbers, we won't be able to see what they are, or it'll be very difficult.
And so I think the question we'd ultimately turn to is if management elects and DASNY elects, there is an ability to have a footnote disclosure about the subsidiaries that could present that information to show you how the numbers on the face was derived, to show that, activity, so to speak, split out by the different components, DASNY as its normal parent company, we'll call it, and then the subsidiary activity.
Yeah. Kim, how do you feel about that?
Yeah, John, Jeff and I actually had a conversation about that, and I think we will be taking a look at it to see how that type of schedule would look. I don't know that there will be much to present for this year's financial statements because we have limited activity in this kind of startup year, but it's certainly something that as we get further down the line in future years' financial statements, as we have more activity coming through the subsidiary, that we may be able to actually produce a schedule that gets footnoted within the financial statements that shows some of that activity.
Okay.
This year, I think there's going to be a lot to report.
Yeah, I will say it's just as a matter of the discipline and putting some precedent in place. I would favor, the breakout, even if it's just in a footnote. I would favor some, statement that allows us to get a snapshot of the subsidiary as opposed to, baking it into the ginormous financial statements that we have.
Okay. Yep.
I agree.
we'll look at that. And again, we'll even look at it for this year, but again, I don't think it will be a whole lot of activity this year. But we'll certainly take a look at that and kind of look at how we would disclose it within the footnote. If there's activity that to show this year that is somewhat material, we'll look at incorporating within the footnote, but certainly on the go forward years beyond this fiscal year, as we have more activity of the subsidiary, we'll be able to show it.
Okay, all right.
Yeah, thank you.
Those are my questions. Does anyone else have questions?
No.
Jeff, are we at the conclusion of your presentation?
Yes, John, that's all we had prepared today.
Okay, all right, well then we can move on to the next item. I would like to note that Janice has joined us. And can I call upon Jenna to give an overview of the internal audit report?
Yes, thank you, John. So I'm going to start off with some mandatory communication. The Internal Audit Department Charter and the standards for the professional practices of internal auditing require certain communications to be made to the audit committee on an annual basis. Every year, the internal audit team members complete an independent and objectivity statement and affirm to the best of their knowledge whether they're aware of any potential threats that might impair their independence and objectivity. And they acknowledge that they are required to report any future impairment if and when it occurs. This signed statement acknowledges that they have read and understand the Institute of Internal Auditing, or IIA, standards on independence and objectivity, the IIA Code of Ethics, the DASNY's Code of Ethics, as well as DASNY's internal audit policies and procedures. There have been no impairments to date. Additionally, the Internal Audit Department Charter reflects the Internal Audit Department's purpose, authority, and responsibility, and recognizes that the department is governed by the mandatory elements of the IIA's International Professional Practices Framework. Briefly, the purpose of the department is to provide independent and objective assurance and consulting services to add value and improve DASNY's operations, and to comply with Public Authority Law, Title 8, Section 9, which states the internal audit function shall evaluate the authority's internal controls and operations, identify internal control weaknesses that have not been corrected, and make recommendations to correct those weaknesses. Are there any questions before I move on? Moving on to the status of our plan and noting the progress that has been made. Included within your materials is the internal audit plan starting on PDF page 2. Overall, there are 11 projects that have been completed and 7 that are in process at various stages as reflected, and 5 that have not yet been started. We have 3 information security engagements on the plan, 2 of which have been completed. Also, as part of our Quality Assurance Improvement Program, or QAIP, we completed the internal audit governance portion. We did not have any concerns as a result of that review. That concludes this portion of my presentation. At this time, I would like to request to go into an executive session. John?
Okay. Could I have a motion to go into the executive session to discuss the financial and credit history of particular corporations, proposed, pending, or current litigation, and the employment histories of particular persons with matters leading to the appointment, employment, promotion, demotion, discipline, suspension, dismissal, or removal of particular persons?
I
I'll
make a
move.
motion.
This is, I'll second.
Thank you, Joe. Thank you, Beryl. All in favor? Aye. Any opposed? We can turn the recording off.
Okay, so Joan has made a motion. Now we need a second.
We can't hear.
Wait, John, can you hear us, John? We can't hear you. Buffalo muted?
Okay.
Thanks, John. We got you.
So
can
John, I made the motion to adjourn the
Okay,
executive session.
Al, do you second?
Yeah, I did.
Okay, all in favor? Aye.
Aye.
Any opposed? We are adjourned.
I heard you need to unmute.